Now, it would appear as if we've got a good opportunity to short this. Okay, here we go. So once again, as we moved up, you see where these thresholds were, and we come back up, and immediately we're above this threshold. You can see that very readily. Now, we come to this point here, all right? Now we can update that threshold for you in just a second here. But it looks like it is still above this line. Let's just extend that over there. See, that's above that line. So that may imply that we will need to test this level. We might actually go even a little bit higher. We've got there's a little bit of room on this. It looks like up to 68.94 on the INX, 96, I should say, and we often see it move that high before we ultimately get a drop. But this big drop on the premium here is pretty telltale of an impending drop. So it could go a little higher, and then we'll see the drop. Or it may be ready to go right in here. So we'll come back and re-examine that once it develops. But right now there's good potential there for short. Oh, and I should have mentioned, not only did we have this drop, but we had this drop in here. I had to refresh that chart. So both of these drops are very much confirming that we're about to move down. The premium there was 442, 443 here. So very good. All right, so yes, once again, look for the drop. It looks like I would be short right in here, and we are. We took that short a little bit earlier, but we're certainly in on the short at the moment. And now we have this target. Okay. Low of 63. So it's going to have to pass through the low volume node at 63.50 and 63.25. We'll come back. I didn't quite make it up to the 96 level yet. And the threshold in here is still pretty high. We're certainly above this level here. Just barely, as it turns out. So actually that may not be. That could work, although normally I would expect to see a drop that's a bit more significant, but we are nevertheless pretty close to this level. So we are short at the moment. We'll average into that if we need to. It looks like the premium's dropping a bit here. So we'll just come back and target right now 63. And you can see how we dropped way below those levels in here and got an accompanying drop in ES, which is fine, although this is still a little bit high, so it wouldn't surprise me if we go back up. But at the moment, it looks like we're coming down to 74 on the INX. below. Okay, that might have been it. That might have been it. Because here we are at 63, just one tick above 63. Okay, so we're just sitting there at 63, but I suspect that we'll probably drop below that. And as I look at how the premium has behaved here and here, as we've dropped lower, of course, we're higher on the premium now, and that would imply that we're going to be going back up. But as this continues to move up, if the premium moves higher and the ES is not moving higher, then in all probability we'll see the ES turn and tank below that level and start heading to the 62.25. I'll just review that once that develops a little bit more. But we reached our target just as we anticipated, and that was a nice little trade. Okay, now see what's happening to the INX right in here. And as this drops below, we should, yeah, there we go. There we go. All right, let's take a look at the profile here. I'm going to extend out that profile so you see it too far. Okay, that's about good enough. So once again, we don't really see the volume dropping off until we get right in here. We've got this low volume node right in here, which is right about where the ascending low value area is moving to. So that looks like a pretty reliable target. So we're going ahead and just deciding to hold this short because I think we've got some more downside potential beyond the 63 level that was the footprint of the premium. That looks pretty reliable. And then if we drop below that, it's going to be, it would seem like it's going to be a little bit noisy until we come down here to 66.41. That's about where that low volume node is at the moment. Or, pardon me, 65.41. So we'll see how that develops. And I can't show it to you here. Oh, yes, I can. Yes, I can. See the YM POC is not quite a point below, about 6 point below is on the YM, and that's a little less than a full point on the ES. So that means 62.25 is a real clear target here as we move down toward that level. So let's just watch that. As we come down to 62.25, we should be right there at 620 on the YM. We still have, well, we could get pretty close here to this low value area shown here. I think we'll drop a little bit below 62.25 though. Although that is a low volume node. Now you see how the premium became divergent at this low, and then we saw the accompanying rally up. So now we moved up to that previous level that we talked about here. Really the threshold that we're concerned with is right here, however. See how we have moved up above that. Go ahead and take that out. And hopefully we'll move below it and start moving back down again. But we have to be careful because of that, because of this level right in here. Now, we should bounce off of that, but as you see, we're moving just a little bit higher at the moment. Because that level becomes a real target for us. And the previous POC, or the POC itself on the Y-end is once again 64.25, which we just hit that. Just hit that. So that's that target was hit. There's a POC. Just try to keep an eye on the YM for a minute though. Okay, looks like we're coming back down now. Now we can say that the probability of moving a little higher at this point can be established really off of this level of the premium, because we were going higher over here, so that would normally push us up a bit higher, and you see that happening. So when you're reading the premium and you're looking at say this threshold here, and you see, okay, we're moving higher, and then we move down a little bit and we leave that as what we would refer to as a threshold. If we go above this level now, which we're doing over here, that's a pretty good indication we're going to go higher still, higher than we were at this point. And now that's what we see happening. So now we see 64.75 as a potential target, all the way back up to 65. But we're at a much lower level on the INX. So that's a bit of a concern, because we could easily push higher on the INX as well. But we believe being short in here is a better approach. Obviously, we could be wrong. But just looking at the profile and everything, that seems to imply to us that the better course here is to short this. Now, just look at where we were here. All right, we're going to refresh this information, but just look at the premium here, and look at the premium here. Okay. See how these two levels seem to match? Okay, let's just adjust the settings so that we can pull that up. Let's see if this is good. At 360 here. 69, pardon me. Okay, so if we're moving up much above here, now notice that's happening in part because we're dropping lower. As the INX, the highs of the INX drop down, the highs of the premium will go up. So you don't want to be fooled. You don't want to be fooled by that. That's really an indication here that this is about to drop. Okay? Because the INX is going down. It's not going up. Okay, let's see if we get what we were anticipating with a more pronounced drop in here. We'll come back. The way to confirm that this will continue to move down is largely dependent upon the lows of the premium. Okay. So here was your level in here at 409. So that's a real key piece of information. 409. You have to drop below that if this is going to continue to move down. So we're just going to extend that just so that you can see it. Get a little bit of a dip here, bigger dip here, that's good. Okay. Our lowest level is at 417. It was over here. And to see us really drop below this level, it would be important to see the premium drop below the 417 target as well. So using the premium to anticipate where the market is headed, use these levels as a pretty cool indicator of where the market is going to go. And as you see here, all right, we started moving above this level, and back up we go. So the premium's not lying. So would we expect it to go and test 64.75? Oh, absolutely. Absolutely. This is going up right now. So if we're short, you got to be careful because this is giving us confirmation, you know, that 64.75 right now is not a target. It's higher than that, unless, of course, the premium again begins to shift. So what we would do is we'd read the pivot right in here, okay, right there. We're higher than we were here, not quite as high as we were there. Just extend that out just to see. Not quite, but close. So we can use our tool to reestablish that threshold if we wish. But you see we're moving higher on the premium. This target now looks like we're going up to 69 on the INX and probably moving up to the 643 level on the YM. So now, if you're short, you got to have, you know, it's sensible, you know, to rethink this short, because there's really not much here that's suggesting we're going down right now. In fact, to the contrary, we're going back up. So I personally am going to get out of this short trade. I'm just going to go flat, because everything there is suggesting we're still moving a little bit higher. And then we'll have to wait for some divergence in order to go short again. It could be, as we look at the trend here, the short-term trend, from this level here, and there was a little drop to here, okay, another little drop. Now we're moving higher. The trend right now is up. Trend right now is up, and so really the best thing to do is to try to get in on a long trade. On a long trade, you're not going to have a lot of room for that long trade, as far as we can tell. But we could see a new high. Let's take a look at some of the math here. Okay, the trend is long. The ES has not hit the standard deviation line up here around 67.75. So being long right now, you know, that makes sense, because we're not seeing evidence that this is dropping. Although the VIX, the VIX is still going up. VIX is, ooh, we have the VIX over here. VIX needs to be dropping here. It's not dropping. It's been going up. That's a little strange. But it is also moved up toward its standard deviation line, which gives us good reason to think that this will drop on a higher high and then push this higher. So yeah, being long right now, and that's what we did. We switched this for long, and I'm now revising my anticipated high, and instead of going short, look for 67.75, and that's that could be a nice trade. So we have reversed our position and gone long. We're not at a particularly good price for being long, but at the same time, right now, that's really what this thing suggests we should be doing. And just looking at the premium there, yeah, it's pretty obvious, especially in here. Now, there's better than an 80% probability that the ES will move up to 67.75. There's better than an 80% probability that it will do that. Now that we've confirmed that this trend is long. Now here's the actual profile, all right, of the IMEX. And you can see that although we dropped in here to that low, You can almost see the trend line that's developed here. Boom, boom, boom. So we're going higher. So now the question is, where is the target on the INX? And to do that, we need this. Okay. So this is looking, let's just identify where that line is coming from. It's from yesterday. The upper value area of yesterday is this green line. Now, I would just like to mention that the composite market profile is at 64.75. We're just breaking above that. And that profile, 64.75, is based upon cumulative volume since the 16th of February. Now, why that date? The reason for that is because let's see here. We've got several different dates. Let me retract what I was about to say. While that's true since the 16th, that's where the POC is. Actually, I don't buy that. That's not a good. That's not a good place to calculate from. The better place is to calculate it from the 30th. That would be the closer major pivot. Now, that still leaves us with 64.75. Okay. So the number is correct. The date was not. Because what we want to do is look at the lowest pivots, all right, and calculate total volume from the date of these low pivots. Now, of course, we have a big low pivot back there in November. That's a major one. And then we have these smaller pivots, lowest since really the beginning of the year was back here on the 30th. Now, the POC is not going to change that much. Whether we use the 31st or go back to the 30th. Now, I think the 30th actually would change a little bit, but the 31st or even the 12th, that should be just about the same. Let's take a look and just see for a fact whether or not that changes that much. Now, if we go back to the 5th, all right, the POC is way down here. Look at that. That's why we're not using that. It's still way down here into January, so the 30th is not going to change. Let's look at when this actually does change. Let's go up to the, yeah, the okay, we'll take it back to the 12th, see if it changed on the 12th. change the date. No, 64.75. Okay, prior to that, we have a much lower POC. Okay, so that verifies that the market has the potential to get some nice support in here for a rally up further. So going long right in this neighborhood isn't really such a bad idea. But our target, nevertheless, is up much higher. But we don't see anything on the composite profiles that is that low. So we're going to use a classic for the purpose of anticipating where that pivot should take place. So once again, just to recap here, we're looking at just below 72 as a potential target. We've already broken the 68, or pardon me, this level here. Let's expand this. Okay, we checked the math, and by that I mean the initial balance calculation, the probability that the market will reach its first standard deviation. And on Fridays, since the beginning of 2016, January of 2016, the probability that the first standard deviation level will be hit on a Friday is 86%. The only day that's any better than that are Wednesdays. Wednesdays are remarkable. 91% probability that we'll hit the first standard deviation line on a Wednesday. And Thursdays have actually gone up. We used to, a couple of years ago, Thursdays had the lowest probability. Now they're ranked third, 83% probability. The worst day now is Monday. Since January of 2016, Mondays are only 75% probable that they'll hit that standard deviation line. And Wednesdays are 78%. Thursdays are 83%. Fridays are 86%, and Wednesdays are 91%. So if you're not trading, on Wednesdays, oh my, not a good idea. So we're still looking for that level to get hit. Maybe the afternoon before it gets there. All right, that's up right at around 68. Now, as we've had this little move down here, you'll notice how the the INX has dropped down into this area of low volume node here, and potential down to the 67.19 area to gain further support. But right now it's just flirting with that low volume node in here. And we may drop a little bit further, but that is easily seen as a target as this market moved down. Okay, so it's easily seen. So until we get there, it's not a bad idea to just, sit tight and wait. Then read the premium. See if divergence is developing down there at around 67.32 as we have it here, because it had dropped as low as 31. So So it looks like we were gaining a little bit of support there, but I'm still skeptical of that. I could see another 3-tick drop on the ES before we really gain support. So we have to be very careful about going into a long trade. So we didn't make it down to 62.75. But look at how low the premium was when we were dropping. Okay. So I wouldn't be too convinced of this level right in here. I'm not too convinced of that at all. I'll take a long trade there, but I'm not convinced. Well, look at where the pivot level was. So nice step up, and looks like we're taking off. So now you see just exactly what we expect to see for premium. See how it's stepping up here in these pivot points, stepping up here. Now it dropped again, but we haven't quite reached where we think this is going, so I'm not going to worry about that too much. It's just an area of caution. What matters here is where this is headed. It should be heading up in the area of 68. So a little caution, but again, we don't say, oh, let's short it now. No, we don't say that, because we have a target, and it's a confirmed target based on the volume. So we're going to leave us the video at this point. We're going to come back and recap the last couple of hours later on today. So the next video you will see will probably be closer to 2 p.m. We're at 12:28 right now. Well, we're back to recap what has happened here, and in fact, as you can see here from the premium, as we moved up to the high here, we saw a pretty significant divergence. The size of the divergence is in and of itself not all that important, although we oftentimes do see a fairly significant drop in the premium when we see a major change in direction. Nonetheless, it really dropped. It really, really dropped. So this could have, it really got to the point where a change in trend could have been forecasted by way of course, as you saw, these big drops in the premium, such as right here and here. You certainly didn't want to be long in that. But okay, so right there at the 411 is the major divergence again. Compare 411 to say 413 over here, and a very good divergence there. And then there you go, right back up. Now, as you see, we just tagged this descending projected low value or upper value area on the INX. But as we mentioned, there is an 86% probability of the market moving to the mathematical calculation from the initial balance that takes us up to 68. Let's pull that back. And there it is. there to 68. So that's still a target. And there's good reason to believe that that is in fact going to happen, because what we have here in the way of a pattern is referred to as a red day pattern. Red day patterns can have significant retracements, and we saw that. We saw that retracement take place here. But all that having been said, the fact remains that there's still an 86% chance. And so we're holding a long trade. We fully expect new highs. Okay, we just broke the 66.75 level. Pardon me, no, we did not. Not yet. But we're close. 66.25. But we'll break that, and we should see a real robust move up, I would anticipate, here in this last half hour. And that's what a red day pattern is all about. Red day patterns, typically, the pattern, as we teach in our course, the low of the morning is in the last half hour. The high of the day is in the last half hour. We are now in to the last half hour. So anticipate a robust move all the way up to that 68 mark. And that would complete it. So as the pattern, the low, that took place in the first half hour. Can't say. Usually it's right around 245 to 250. It's where it usually goes. But sometimes it has to go right into the close. So we'll come back and we'll address that. Now, just as an analysis, this new high on the premium that took place here not give us any basis for anticipating this drop. I think we've just had a lot of weekend selling going on here that may prevent this pattern from materializing. So we too feel it's prudent not to let this just eat up all of our profits. So we're getting out of that long trade, and we could still see this thing rally up. Of course, that's what the premium is predicting here. But now that that's a little tough to call. It's a little tough to call whether that'll happen today, given this rapid sell-off. It's not the typical pattern. This continues just to creep up. We don't see this kind of a big drop. Pretty unusual. Yeah. That's all saying that we're going to go back down and test that. There we go. There we have it. Now, could it bounce as we hit down here at 60.25? Sure. Sure it could. So we shall see. We haven't seen what might happen here. We haven't seen a huge rally in the last few minutes of the close, but historically there are times when we see buying kick in the last 10, 15 minutes of the day, and the market just rockets. And again, you see the divergence there on the premium. And, could this happen? I suppose it could. I'm not particularly confident in that. The pattern would suggest one thing, but you've got to read the premium. Now, the only thing is, here in this particular case, the premium is forecasting a return back to that price. So we got a little long trade going in here, and I'll be very surprised if it does that, but it can happen. So we'll just give this time, and we'll either get stopped out, or maybe this thing will run all the way. All right, well, it came down to 60.25. We are divergent there. This is the last opportunity to see this take off. At this stage, highly unlikely, but stranger things have happened. If you wanted to scalp this, you had a little chance here. See what happens, because this is pretty interesting. Not looking good. Now we get stuff there. Okay, well, that was it. Now the very odd thing here. Let's see here. Could we possibly sell off into the low here instead of making it to the high? I wouldn't bank on that. Just way too much buying pressure, but all the same. Now we have no more premium to work with, and it's, sometimes it's in these kinds of instances where the market really does some crazy things in the last 15 minutes. So, all things considered, you saw the concepts through the course of the day, and what we were anticipating would occur, as well as how we use both the premium and the market profile indicators to base our judgments on. So if you want further information, come take a demo, look at our website. We'll be happy to help you out. There's some of the best trading mechanisms we know of amount to the market profile indicators and the premium. So we highly recommend that. And I'm RSKsys Intl, Spoon for Risk.